recording this session, and this will be available to everyone after the webinar. So probably in like tomorrow or in a couple days. But I'm Tatiana. I'm with SF Fire Credit Union in our marketing department, and we're really excited to share this information with you today. But before we kick this off, we want to share a few housekeeping items with everyone to make sure that your Zoom is set up properly. So we're going to go over the different viewing, audio, and communication controls that you'll be using today. So if you're joining us from a phone or a tablet, you'll be controlling your audio in the top left corner. And then your communication controls, which we'll go over in a little bit, will be at the bottom of your screen. If you have a question for us, we do have chat disabled for attendees, but we encourage you to ask questions during the webinar. So to do so, you'll find the Q&A button at the bottom of your screen. Go ahead and tap that button, ask us a question. We're happy to answer the questions during the webinar. Some questions might be held till the end of the webinar. And if for some reason we can't get to your question, we'll be sure to email you after the webinar to follow up. Also, at the end of the session, we have a dedicated Q&A portion of the presentation. So we'll be answering a lot of questions at that time as well. All right, well, welcome to Helpful Tips for First-Time Homebuyers. Today, we want to demystify the process of buying and financing a home. And to get started, I'm going to hand it over to Jeff Hudson, who is our AVP of Real Estate Sales.
Thanks, Tatiana. Good evening, everybody. We're really thrilled that you could join us this evening, and hopefully we're going to be able to provide a little information that's going to be useful to you. I just wanted to kick off the evening by mentioning a little bit about San Francisco Fire Credit Union, if you're not familiar with our history and our mission. San Francisco Fire Credit Union was founded in 1951 by firefighters for firefighters. However, the credit union has grown over the years, and now we're focused on not only the needs of firefighters, but those of the entire community. We realize in the home buying process, there's a lot of home lenders out there, and it can sometimes be very confusing to understand the difference between one lender and the next, other than who's offering the lowest interest rate. So a couple things that might be helpful to know about San Francisco Fire is that we're local. And the entire team that works on your loan is local, which means we understand many of the unique aspects associated with owning a home in the Bay Area. And our goal for the evening is to provide some information, some key elements that we think is helpful for you as you prepare for your home buying journey, and just to prepare you as much as possible. So again, thanks for joining us. And with that, I am going to turn it over to our host for the evening, Nimish Sheth.
Thank you, Jeff. Nice to meet you all, and good evening. I just want to let you a little brief about me. I've been in this industry for over 17 years. I have worked from the larger banks in New York City to here at the local San Francisco Fire Credit Union. I look forward to doing this training with you guys, and I hope you will learn some new knowledge on mortgages from this.
All right, thanks so much, Nimish and Jeff. So before we get started with the webinar, we do have a question for our attendees because we want to get to know you a little bit better. But the question that we have for you is, what is stopping you from buying a home? So I'm going to go ahead and launch the survey question. So go ahead and take a moment to input your answer, and you can select multiple different choices here. All right. Looks like just about everyone has participated. Okay. So now I'm going to share the results. So what's stopping you from buying a home? It looks like the most popular answer is budget, followed by interest rates, low inventory, changing market, and then not feeling prepared. So I think we'll cover a lot of these topics today, but budget is a big one, and we're here to help you figure that out. So All right, let's get right into it. So as Nimish mentioned, he's our mortgage loan officer here at the credit union. And Nimish, can you tell us a little about, we all know that the market is changing a lot. What are some reasons people are buying right now, and have those trends changed since, the pandemic and what we were seeing before?
Sure, no problem. Yeah, so of course, number one, security, not wanting to rent. I mean, that's huge because paying rent is not even cheap here in the Bay Area or California for that matter. And we're just throwing our money to landlords rather than ourselves gaining some equity in a home and paying down on a physical property for ourselves. Of course, to own a home means more space, land, could have pets running in the backyard for the children. Um, in this world that we also live in now, we're working from home, majority of us. So to have a separate room for an office, huge deal. To have a physical asset to gain wealth, that's a huge one too. Again, going back to the gaining of equity and paying down on a property and paying down a mortgage. So you're actually gaining and seeing money from what you're spending rather than just paying off money to a landlord and never seeing that back. Current interest rates. Of course, the interest rates have been rising for this past 9-10 months. However, they're still very low significantly in regards to the history of rates. And to borrow $1 million, $2 million at that kind of interest is still a very good thing. And it is a huge opportunity for you to also potentially have a possible tax deduction as well. But we are not advisors on that, but you can speak to your tax account advisor on that and he can explain further, or she.
Perfect. Thanks so much. So, we're focused on first-time home buyers today in this webinar. And can you talk a little bit about some of the things you should have in mind to get approved, and like what's being expected of borrowers?
Yeah, credit being one of the big factors here, of course. Poor credit may not qualify to get a mortgage. Good credit will be able to get you, perhaps a loan. At the same time, great credit has the ability to give you potentially a better interest rate even. So credit varies depending on the scores, but credit is a huge factor in regards to qualifying or not, or even qualifying for a better interest rate. Next thing, equity, down payment. What do you have for assets to pay down? If you have 5% minimum, we require 5% here at the credit union, but 5 to 10% to 15 to 20 would allow you to analyze how much you can pay down, and we will then be able to tell you what you qualify for based on the loan amount to the purchase price, and if you had to pay the mortgage insurance, what that will be, and we will get into that a little bit later here. The other one is ability to pay, debt to income ratio, which is one of another big ones for us here, which we basically take what is your gross income and calculate that against all your debt from your credit report, specific to credit report, in addition to your new purchase, of course. So if with your new purchase, your mortgage, your taxes, your insurance, if there is a HOA, homeowners association, that would also be applicable. And then we would take all those debts along with the new mortgage payments and take that against your gross. And that's how we calculate what is your ability to pay the loan or not. 45% is generally the number by default in the history of this industry, more or less, where the gross income to the debt has to be at 45%. There are case-by-case instances where there are exceptions that can be made.
And quick question, when you talk about debt to income ratio, are you talking about net income or gross income?
Gross income.
Okay, good to know.
Yep.
And one thing to note for attendees is that if you are a member of SF Fire, you can check your credit score for free quarterly in online banking. So that's a great way to keep track of your financial health. All right. Great. So Nimish, can you talk a little bit about some other things that buyers need to do before they put in an offer on a home that they're in love with?
Yes, of course. Okay, first analyze your assets, see what you have for assets to put down. If you have the ability to get some gift funds from a family member, look into that. Find out what closing costs would be estimated based on what purchase you're looking at. Reserves, 2 months basically is the minimum, generally speaking, which basically means 2 months of what your mortgage, taxes, insurance, and if there is the HOA, that you need to have at least 2 months of that in the bank. It doesn't have to be liquid. It could be in the retirement account as well, but we just require at least a minimum of 2 months. Documenting large deposits. If you had a recent large deposit come in the form of any that is not a bonus check or something of that sort, just source them. Make sure you double check what if those funds can be used as your own assets or not, because everything has to be sourced again. So if somebody just gave you $10,000, $9,000, we would have to source that. So we would have to find out what that funds are for and why you got them. And if they're not in the laws of the mortgage industry, then we would have to back those funds out of your account. Next step, of course, getting pre-approved. That would be coming directly. Just come to us. We will be able to guide you in this whole process as to what you need to do to get qualified for the home. What we would start with is simply doing a pre-approval by pulling your credit report, putting in your information, from basic information to assets to employment, income, history of residence, along with employment. Excuse me. And then from there, we will tell you what you qualify for based on just what we've done from the application. From there on, we will dig deeper and see what other options we have for you, whether options of getting gift funds, et cetera, for qualifying or adding another member, et cetera. And then the next one is selecting a realtor. We have here Rohit, who will be coming on next year, who works for Remax. He's been in the industry for many, many years, who could definitely be one to help you out in purchasing your new home.
All right. Well, Nimish, so let's dive deeper into the loan process. And can we start a little higher level and talk a little bit about, what are some loan options and program options for first-time home buyers?
Of course, there are many actually different loan options. The minimum we require, again, as mentioned here at the credit union, is 5% down. From there, we then have many options of loan programs for you. There's a program called the WISH program as well, which is just a first-time home buyer, if qualified, down payment assistance program. In addition, there's, again, you see mortgage insurance here on this slide, and that we'll get into the next slide. But that, again, basically is something that allows borrowers to purchase a home with less than 20% down.
Yeah, because 20% could be a lot for people.
Yeah, especially when it's $1 million minimum home out here.
Exactly. Great. So yeah, so you mentioned mortgage insurance. Can you tell us a little bit about this?
Yes. So getting to the mortgage insurance more in depth here. So allowing you again to buy a home with less than 20% down, the average home more or less probably $1 million here. So this way you can buy a home with $50K down plus the closing cost. That being said, so mortgage insurance, it allows you to do that, but it does come with a payment of such on a monthly basis. The more you put down, the less the payment will be, and vice versa. Mortgage insurance does actually disappear at a point of 78% loan to value. So if you do initially buy a home and you're paying this mortgage insurance, it will disappear when you get to the 78% loan to value mark. So for example, you put 5% down, you're at 95% loan to value. When you get to that 78 mark, it can disappear. At the same time, if you gained equity in your home, you renovated your home, and so you obviously gained some equity perhaps, you can reappraise your home and then go ahead and try to remove the mortgage insurance as well, as long as your loan to value then is at 80% from the increase of equity.
Perfect. All right. So let's go ahead and dive into, this one is always fun. What are some things that can hurt your approval? So this is, after you've been pre-approved, what are some things you should not do?
All right, well, so discuss with your loan officer before doing any of these, the following, such as buying a new car, purchasing new furniture, co-signing for someone, a friend or family. Just make sure that your numbers still qualify if you were to do such, just so you know if it's not going to go over that ratio, that 45% number we said, where you would maybe not qualify now to purchase the new home. Definitely no practice being late on payments. Always pay your payments on time. If you were to change a job, just let us know as soon as possible, especially if it's in the process of doing this loan, just because that will change the whole loan process, and we're going to have to adjust everything accordingly to the new job. But if you are to do that, and of course I assume you do that based on getting more income or whatever, just make sure you let us know and then we can rework scenarios. But generally people are not changing jobs in the middle. But if you happen to get a new opportunity and it makes sense, then just make sure you let us know immediately so we can make the adjustments, because we will be doing a verification of employment at the end of the process here. So it will be known no matter what. And don't practice moving monies around during this process if you're just moving from account to another, just because in the end, we just have to source all funds, and it just becomes more work for everybody.
Sounds good. I have a quick question on the
Sure.
changing jobs topic. In the Bay Area, we have a lot of contract workers and people who have side gigs. So can you talk a little bit about, maybe how to organize your W-2s, I think it would be, or your tax documents if you do have multiple jobs throughout the year?
Oh yeah, if you have, well, so are you saying if you have a second part-time job, or are you saying you are just a contractor and you just have
a contractor, maybe you have like 1099s, things like that?
Got you. So I mean, for a 1099, I mean, we're gonna look at your tax returns, right? We're gonna look at your last 2 years, and then we're gonna look at your if you're a 1099, then we might have to look at a profit and loss statement. Might have to look at it could vary. As a contractor, it's not as simple as a W-2 unless you are getting a W-2 from the company. And then, of course, if you're a contractor, you might tend not to get payments directly. It also varies if you're getting paid as a salary, as a part-time salary, or if you're just getting checked based on per work. So, I mean, that can get a little more complicated, but again, that would be more discussed further with the loan officer on a case-by-case scenario.
Yeah, perfect. Thank you.
Yep.
All right. So we've talked about loan programs, PMI. Let's get into, what are some of the term loan options? And then can you also tell us, are you seeing any trends in the market right now with, what people are choosing?
Oh, of course, yes. So, there's the traditional 30-year fixed mortgage, which is by default the default one. But you have a 20-year, we have 15-year of the fixed rate mortgages. The 30-year will tend to come with the highest interest rate of the lowest payment, whereas the 15-year fixed would have the lowest payment, but of course the highest payment, lowest interest rate, but the highest payment, because of course you're paying it off in half the term, where the 20 would fall in the middle. Then we have what are called adjustable rate mortgages. Here at the credit union, we have a 10-year, a 7-year, a 5-year, and a 3-year, which means basically the 10 years fixed, and then it would adjust for 20 years, as all adjustable rate mortgages are based on a 30-year amortization. You can always refinance after the fact, or you can refinance before the fact. But basically, the 10-year would have the highest rate of the adjustables, where the 3-year would have the lowest rate. And again, they're just fixed for the term of that 10-year, 7-year, 5-year, or 3-year, with a cap of 5% on top of the going interest rate at the time for the life of the loan. And then again, like I said, you can always refinance to a fixed rate if rates come down at some point, so that you can get back into that 30-year locked rate.
Perfect. And so, with the changing market, are you seeing, because I know maybe during the pandemic, people were going more towards the fixed rate loans.
Yes.
Do you see people moving in a different direction, or is it pretty much the same?
Well, today, definitely, I mean, we're doing a lot more adjustable rate, of course, just because the 30-year is significantly higher to some degree versus the adjustable. So people are, tend to play the market and get the lower interest rate at the moment, so that, maybe in the future they can go ahead and refinance again, of course. But yeah, we're doing a lot more actually adjustables right now. I think a lot of buyers are looking at the adjustable rates because of the rate difference. And again, of course, since we're looking at $1 million, $2 million purchases out here in the Bay Area, California, it makes a big difference on your payment.
Perfect. All right, thank you. And I just want to note for attendees, we have a lot of resources on our website. So if you go to the home loan section of the website, you'll find things like calculators, educational articles, more information about the assistance programs that Nimish mentioned. And then, of course, you can reach out to Nimish, Jeff, and Rohit after this call, and we'll send out the information in a follow-up email. Also, I didn't mention at the top of the call, but we will be doing an opportunity drawing after the webinar. So those of you who have attended will be put into the drawing, and we'll be giving away a $50 Visa gift card. So thanks for being here with us today. All right, cool. Well, thanks, Nimish. That was great.
Yes, thank you.
Again, for attendees, if you have any questions, go ahead and throw them in the Q&A and we can get those answered for you. All right, so before we move over to our next section of the webinar, we're going to launch another survey question. And this time we want to know, how are you searching for a home based on your current finances? So some of the options include online, realtor or agent assistance, attending open houses, word of mouth, walking into realtors' offices. I know we always see those offices, you know, plastered with flyers, and then other. So go ahead and input your answer. And you can choose multiple answers here as well. Okay. All right, thanks everyone. So I'm going to go ahead and share the results, and it looks like the most popular answers are online or realtor agent assistance, followed by attending open houses, which is exciting. We can do that now. And then word of mouth and then walking into realtors' offices were also options that were selected. All right, well, thank you everyone for participating. Up next, we have our realtor partner, Rohit Sika. He's with Remax Active Realty. So Rohit, want to say a little bit about yourself?
Hi, everybody. Thank you for having me. Yes, I have been in the industry for over 20 years. I'm a broker. I've done transactions all over California, from the East Bay to Sacramento, all the way down to San Diego. Yeah, I look forward. I'm very excited to be here today, and I look forward to answering any and all your questions. I really love to educate new buyers who are coming into the market. Thank you.
Awesome. Thank you for being here with us today. All right. So I think it's always interesting to have, you know, our loan officer's perspective, you know, what home buyers should know. I think it's great that we have you here with us today to tell us, you know, from the buyer's perspective, you know, what are some things you should do to get started, obviously, in addition to getting your finances in order?
Well, first thing you need to do is think about, what do you want? What are you looking for in a home? It starts off with the number of bedrooms, starts off with the location. Once you understand what you want, then you should start the process, of course, in finding an agent like Nimish, who you can sit down with, and it's good to do either face-to-face or in the office, or you could do over Zoom or even over the phone, but understand what your numbers are, of course. And once you get pre-approved, then you go ahead and start your search of finding what you're looking for.
Awesome.
And
oh, go ahead. Sorry.
yeah. No. I think I told it.
Perfect.
Mm-hmm.
All right. So I know that we covered a little bit earlier, like thinking about your dream home. Can you talk about, you know, some things that, you know, some factors that are involved in a dream home, or, you know, maybe what buyers should be thinking about if they're not already?
Well, I think the dynamics have changed so much from, you know, when before COVID, then COVID happened, and now after COVID. I think buyers are now, they have to think about what their commutes are like again, right? A lot of companies are reopening up. They should understand, my rule of thumb is max 40 minutes, go out and find a home. You know, you don't want to go anything longer than that. Best case scenario, find something 5 to 10 minutes. I mean, but of course that's hard, especially in the Bay Area with the way prices are. When we had COVID, people were moving out all the way to Tracy, Sacramento, thinking we're going to work from home. Again, the situation has changed. Some of the companies are calling these people back. Some of the companies have agreed to have work from home concepts. So, you need to understand what's demanded from you from your workplace, and make sure that your commute shouldn't be longer than 40. It does take a toll. Everybody has families, you have kids, and it's just good to have a well-balanced commute life. The other thing you want to look into your new home is, again, finding what's going to be comfortable for you and your family. You might have 2 kids and a dog, and you might need something that's going to have a backyard and at least 3 bedrooms, 2 baths, and in something in a desired neighborhood you like. And again, it's going to factor into how you're going to commute, how you're going to drop your kids to school, and live your daily lives. Again, the other thing now is the type of home. As we know, the prices are still a bit high in the Bay. So we got to see, after speaking to someone like Nimish, understanding what your affordability is, then we have to look realistically as to what type of home you can afford, whether it's going to be a nice big 3,000 square foot home, or is it going to be something as small as 1,000 square feet with a lot size of maybe 5,000 square feet, which we see in the Hayward area. And again, if it's something that your budget requires that maybe you have to get a condo, that's the reality we have to look into. And then getting a condo means, are we going to have like an indoor washer dryer unit? Are we going to have parking amenities? Will the complex be one of those new style of living where they have gyms, barbecue areas, stuff like that? It's up to you to see what you want and like, and again, work with your affordability.
Yeah, those are all great things to think about. Even the gym. I love that. All right. So can you talk a little bit about, if you found that dream home, dream condo, dream apartment, what to do when you found it? So what are some steps people should take?
A lot of people today, of course, they're online. They're always trying to research stuff. But again, talk to your agent, talk to an agent, talk to someone you're comfortable with and know who's going to work for you. My job as an agent is to right away, the minute you tell me we found this home, I need to go start talking to the other agent and ask him if he has any disclosures on hand. We need to understand what you are getting into now. Again, prices are high, and it's an investment you're making that we don't want to put you in a bad situation when. So you want to know kind of what are the bones, like what's going on with this property, understand the neighborhood, understand how the schools are like, understand what your affordability and costs will be when finding the dream home you're looking for.
Perfect. This actually makes me think of something we were just talking about today. In a team meeting, we're hearing that the home value prices in the Bay Area are dropping due to the higher rates. Are you seeing that trend? Is that something you're seeing?
Yes, we are seeing a bit of that trend now. Mm-hmm. With the rates going up, I think buyers are not jumping in to homes, so they are sitting longer on the market. And just because the rates have gone up, it is an ample opportunity for some of you buyers to jump in and grab something at a pretty decent cost that compared to 1 year ago, their buyers had to literally take the home as it is. They had to pay whatever the seller wanted just to get the home, and then they're dealing with 20, 30 offers. I think in today's market, you could be still dealing with a few offers, but a lot of the sellers are now starting to come to reality that they're not going to get what they want. And some of you buyers could take advantage of asking for certain things on your side, such as making some repairs, getting some closing costs. This is a very ample situation for some of you buyers to get into the market with.
Yeah, so it sounds like, even with the rising rate market, it might be a great time to buy. And considering, the maybe rising rates, they might go even higher. We don't know. but you can always refinance. So it sounds like it might be a little less competitive than it was.
I think so. And I
yeah.
think also we are hitting into the holidays, so the market will slow down. So keep your eyes open. There could be something great out there for you.
That's awesome. So we do have a question that just came in. So I think this is a good time to ask it. If it's not your dream home, what steps do you recommend taking? How quickly can you resell and put your home back on the market?
Seems like you may have been rushed in the process and you probably bought in the hot market. I mean, again, look into where your life is right now, okay? And again, we have to see when you bought this home versus today's prices. Is this something you can maybe think about selling and maybe break even? Or is this something you're going to take a loss on just to get out because you're not happy? Or is it something you can deal with and kind of wait and see how the market plays out in the later years to come? If it's not your dream home, is it somewhere that regardless of how the home looks or is are you still comfortable with your regular life living in the home? You want to ask yourself all these questions before thinking of putting it back on the market. And with, like I said, with today's market, it is a little slower, and you have the patience sometimes to have your home sit maybe 30 to 90 days on the market. These are things you should talk with your significant other and understand and plan and prepare. And of course, sit with agents like me so we can give you the whole synopsis of what scenarios we have in store to give you a better idea and better educate you on the process.
Perfect. Sounds great. So we have another question that came in, which I think is similar to what we were discussing. So if we enter now at the current rates, when would you recommend to refi for a lower rate later? I think that's kind of hard to predict, but do you have an answer for that one?
I mean, as soon as the rates drop, right? I mean, it depends on the from my understanding, it depends on when you got into the house. It depends on, I think, on the loan scenario you're in, and again, your job factors and stuff like that. I think if you just closed escrow a month ago, most lenders should be able to refi you within that month. I believe you guys will be able to do it right away too, right?
Did you want to address that, Jeff?
Yeah, if I could, and thank you, Rohit. So a couple of things thing to bear in mind when you first buy a home is that we're going to consider the value to be the lower of either the new appraised value or the acquisition price during that 6-month seasoning period. So it's not that you can't do it, it's just that we're going to consider the value to be what the purchase price was. What I really wanted to address is the good time to refinance. So the good rule of thumb is going to be this: is generally speaking, there's closing costs associated with the first mortgage, give or take around $3,000 for just the purposes of round numbers. What you're going to want to take a look at is if you refinance your existing balance at a lower rate, you're going to have a monthly savings. Let's just say it's $100. So what would happen is you're spending $3,000 up front to save $100 each month. So you're going to look at it in terms of a break-even period. That would be about 30 months, 2.5 years, thereabouts. So that's kind of the rule of thumb. You're going to want to take the cost, you want to take the monthly savings in interest, and you'll want to find out what your break-even period is. If you're going to be in the home for that at least that period of time, then it's worth taking a look at. If not, then rates have probably not reached the point where it's beneficial to refinance.
That's great. That's a very smart way to think about it. Awesome. Okay, great. Well, thanks for the questions. So now let's dive into an exciting part when your offer is accepted. So what are some things that buyers should be prepared for?
So time is of the essence, right? So that's why we kind of tell buyers, know who you want to work with as a lender. If you go and sit with Nimish, understand what your finances are, because now once you're in contract, this clock starts ticking. The good thing with today's market is that you have The sellers are no longer looking for non-contingent offers. You can actually put in an offer with contingencies and negotiate with the seller. The key thing, what we want you to do is, let's say we get a house, we get into $1 million contract. That's when we put into escrow, we're putting into escrow 3% of a deposit. My job as a realtor is to protect that deposit until we know the loan is going to close. So now we have what's called contingency periods on this contract. You have an inspection contingency, you have a loan contingency, and you have an appraisal contingency. The standard days for these on contract are 17 for the inspection, 17 for the appraisal, and 21 days for the loan. My job is to make sure I'm also in contact with Nimish to make sure your loan is going properly and smoothly before I remove any contingencies. Again, I have to still be in contact with Nimish over your appraisal, make sure we have no issues with the home value, especially in today's market where home prices are starting to decline a bit. We want to make sure that the value is there. Otherwise, if I remove any of these contingencies and we can't perform, that could be your deposit loss. The other thing is now, if we have inspections and we find out there are major problems with the home, these are things we have to sit down and discuss and understand to see if it's worth continue buying or pulling back. So you have options now compared to what the market was a year ago, where people just wrote an offer, bought it non-contingent, and made sure the deal went through. But in today's market, now, if we find an issue with the inspection, let's say $30,000 worth of termite, we can either negotiate that with the seller, we can maybe ask the seller to give us some kind of credit, or we can cancel the contract. Going to your appraisal, if we write an offer for $1 million and the appraisal comes in at 900,000, now my job is to either help you negotiate to bring the cost down to 900,000 with the seller, or the second thing is, if the seller doesn't want to negotiate that and they still want their $1 million, and just like in the last market, if the appraisal did come down lower, the buyer would pay the extra cost over the appraisal. Or now we have the right to say, let's agree to disagree and cancel the contract and get out. Same thing with the loan. 21 days, you want to make sure Nimish gets all your paperwork, they process it through the underwriter. God forbid anybody loses a job, that's something that then we can cancel the contract. But we need to make sure all our ducks are lined up when we're in this process. And that's why time is of the essence. We can't wait. We have to make sure all documents get into the lender and that we do our due diligence in the process.
Awesome. Yeah, it sounds like organization is key, and that it also, helps to stay on top of all of these contingencies. So that's great. All right. Well, your offer is accepted. You move forward with purchasing the home. So what are some of these final steps that a buyer has to take?
Final steps the buyers are going to take is this. Now, once we're satisfied with inspecting the house, understanding what the bones are of the house, and we're released an inspection contingency. Once we're satisfied that, hey, the house is appraised, we're ready to go, we'll release the appraisal contingency. Then once we know the loan is ready to go, and usually when I do it, I release it once we're ready to call what's docking the loan, getting the documents ready to go to title. I will release the contingency and make sure the buyers, and then we'll start the signing process. And then once you sign the signing process, you will sign all your loan papers, all your notes, all your deeds. And what happens is the next day, they will, or within that day, they will send those papers back to the lender. The lender in turn will look it over, review everything, make sure everything's okay. And they will fund your loan either that day or the next day. Usually it's done the next day in the morning. And then depending on the county we are in, they will either record the same day or record the next day after the funding. And that will be the final step. But before we record, we will do one final walkthrough on the property to make sure everything's okay, and sellers kept their word, and that we had no red flags. And then again, after recording, ta-da, you are a homeowner. Congratulations, here's your key, and enjoy and make wonderful dreams and memories in the new home.
Awesome. That's so exciting. Well, thank you for all of that. This last bit of the webinar, we have some questions that, people have submitted or that we get asked pretty frequently. So we're going to go ahead and ask these questions. But again, to the attendees, if you have any other questions, please feel free to submit those. We'd love to answer them. So I know that we just talked about, you get, all of your documents signed, you get the keys. At that point, can you move in? Is it ready to move in?
So again, going back to the whole contract, the contracts can be negotiated, right? Our standard real estate contract for a home is 30 days. So if we go with the standard days, then what happens is, yes, once you go through that whole process and once it records within that 30 days, you can move in. There are some other scenarios that could happen. Again, let's say the seller wants to sell their house too. I mean, they're selling you the house, but they have to find a house. So now, because they have to find a house, they might have to ask you if they could rent it back from you. So that could be in the contract written that, okay, we'll close in 30 days, but I might need another 30 days to rent it back after closing it. So that way I can find a house, and then it could be a matter of 60 days. But it's negotiable. It's different scenarios, but it just depends on when you close and how fast the seller has moved out.
Excuse me. Perfect. Thank you. Well, I think this might be a Nimish question, but will my pre-approval be applicable in other states?
Unfortunately not, because we only lend in the state of California.
Okay. Quick and direct. I like it. No. All right. Well,
I wish we lent everywhere.
So you could be a member anywhere. We have, ATM access, all of that stuff. But yeah, to buy a home, we only do home loans in California. So with the rising rate market, does Asset Fire Credit Union offer competitive rates? So Nimish or Jeff, did you want to take that?
Yes, we definitely offer very competitive rates. As a credit union, we tend to offer credit unions generally, compared to the larger banks, offer very competitive rates. We tend to stay in the top tier of the competitive rates. But if Jeff, you want to add on further, but our rates are definitely very competitive.
I would agree. We put our rates up against any lender. We do a rate survey every morning, and we try to stay as competitive as we possibly can.
Awesome. Thank you. All right. Well, I know that I think Brohi mentioned disclosures earlier, those disclosures, inspections. But when you're reviewing those disclosures, what might be a red flag that, buyers or their agents should be looking for?
A lot of buyers want to see, first of all, see if someone died on the property. So a lot of people will either be turned off by that and skip doing that, or they could be saying, let's try and negotiate a deal. Another thing people want to look for is any past or recent problems the seller has had, especially depending on the age of the property. If it's an older property, were there any leaks? Are there any issues with roofs? And again, that's why I always make sure buyers get their own inspections done. A lot of sellers will have inspections on hand, but sometimes it's still good for a buyer to reinvestigate everything, especially if the property is going to be sitting on the market for a while. I'd rather have you get another set of inspections done, have different eyes look at it to make sure that everything is okay. Because again, when you're getting into a home, you have to do a certain amount of maintenance, and it just depends on the person. They're going to maintain or take care of things. And again, as a realtor, we have to disclose as much fact as possible. And we have to make sure we get out of the sellers as much facts as possible, but sometimes sellers won't do that. So I always advise buyers to keep investigating and understand and ask a lot of questions through the process.
Okay, that's great. I think this last question is very similar. So I'll kind of change the question and ask, is it the realtor's job, or is it common for the realtor to also review the disclosures and the inspection reports?
Well, it depends on most cases. So I myself review it and I go over it with the buyer. It depends on the realtor and who you're working with. Technically, it is the buyer's job to investigate, and they have to go over it. But I myself, I don't want, we try to avoid as much lawsuits as possible in this industry. So we want to make sure we go and that's why I'm saying I'd rather go and do my best. But like when it does come to stuff like inspections, I make sure the buyer is there, because when they should be there with the inspector and go over everything. That way the inspector can break down proper detail, whereas I know I understand certain things, but because the inspector is the professional, you would have them rely. And same thing with like when you're buying a condo, we expect the buyer to go over the HOA docs. And I tell buyers, since I'm not an accountant, they have their budgets, CCNRs. I tell buyers to go over with the accountant, the CCNRs, to make sure that the HOA is within budget. That way I don't want nothing. I can't say it because I'm not an accountant. I don't want to take the liability.
That makes sense. And I mean, it's the buyer's investment and the buyer's money. So that makes sense that it's ultimately their job, but it's nice that they do have you as someone to consult and to, advise as much as you can.
Yeah. And my main job is to tell you as much material fact as I know.
Mm-hmm. Yeah,
so.
Absolutely. All right. Well, I don't have any more questions in the queue. So I think we've reached the end of our webinar today. So I think we've learned a lot today about, just the changing market and maybe how to approach the changing market. It's intimidating to see these rising rates, but at the same time, there's a lot of opportunity out there. We do see home prices dropping a little bit. You have maybe some more negotiation room. And then of course you have these brilliant people to work with. You have Jeff, Nimish, and Rohit. So thank you all for your time and being here with us today and sharing your knowledge. And I also would like to thank all of the attendees for, spending an hour with us this evening. So thanks, everyone.
Thank you all.
All right.